Well, Kenya is a big and very important player in East Africa. For more on its economic outlook, I spoke with Anzetse Were, development economist and columnist for Business Daily Africa. And she began by analyzing President Kenyatta's positive outlook for the country's economy in 2019.
Well, I think you should bear in mind that often government projections tend to be higher than what actually happens. And often you'll find revisions downward over the course of the year. I think one of the factors that informed last year's growth was the robust agricultural production that recovered from the year before. This year, fundamentally, the rains have to come and agricultural production has to remain high. And further, we need to see continued good performance in the services sector, particularly ICT, transport and logistics, as well as tourism and hospitality. In terms of manufacturing, there is a need for concerted effort around increasing and improving the manufacturing growth numbers.
Now, we know that manufacturing is part of the Big Four agenda, and for our audience, that's the country's 5-year development plan focusing on 4 pillars of the economy: manufacturing, affordable housing, universal health coverage, and food security. So let's start first domestically about the sorts of efforts and progress that we're seeing in this space.
So when you look at the articulations and the specificity of those 4 pillars, it comes from a much broader national blueprint plan that the country has had for a while now, and it goes through until 2030. So I think in terms of manufacturing specifically, that's probably one of the weakest sectors in the economy. I think it's one of the sectors that has not received as much attention as, for example, agriculture or healthcare or affordable housing. And if you look at the structure of the Big Four, you could argue that manufacturing is actually the anchor pillar. So whether it links to agriculture in terms of agro-processing and agribusiness, whether it links into affordable housing in terms of construction materials, and of course it then links into the healthcare with pharmaceuticals.
And why do you think there hasn't been as much of a focus on manufacturing?
Fundamentally, if you talk to manufacturers now, there are 2 really main concerns. I think first is the level of imports that are coming in from other parts of the world that are often underpriced and are being dumped into the domestic economy. So what's happening is that the domestic demand for manufactured products is being fed by imported items. That's the first thing. I think the other concern is counterfeits. So there is a very big problem with counterfeits in Kenya, and I think broadly in Africa, and of course government is trying to do what it can to clamp down on counterfeits. But the reality is, because of the nature of our customs borders, a lot of counterfeits get in. So what is happening is that the domestic demand that would feed manufacturing is actually being absorbed by external parties.
Tell us a little bit more about perhaps some of these external partners and trade partners' role in pushing for the Big Four agenda for Kenya.
Well, absolutely. I mean, if you look at Kenya's export portfolio, we export quite a bit into the EAC, that's the East African Customs Union, and we also export quite a bit into the COMESA market, which is sort of East, Central, and a bit of Southern Africa. So when you look at where our exports come from, or go to rather, particularly our manufactured exports, they are very much in terms of the regional markets. If you look at our agricultural commodities, however, and here I'm talking about tea, coffee, horticulture, and floriculture, you'll find there's a much broader market for that. You'll find there's a lot of that going obviously into Europe and North America, but there's also a lot going into Asia, such as Pakistan, India, and China. And then, of course, the other big sort of regional agreement that we're a part of is the Africa Growth and Opportunity Act, AGOA, which is a special trade deal between Africa and the United States. So you'll find that Kenya is one of the countries in Africa that has really leveraged that deal, particularly in our textiles and apparel sector, and we've actually just built almost an entire industry around AGOA.
Now let's also look internally at some of these small and medium-sized companies. We saw that they did tend to struggle when the government capped commercial lending back in 2016. So talk a little bit about this new SME credit guarantee scheme that was announced, and how far that goes to really addressing their needs.
Now, the credit guarantee scheme is fundamentally de-risking the SME sector. And so it's basically telling banks, listen, we're going to guarantee security in terms of the financing you deploy to the sector so that banks can then be a bit more generous and a bit more tolerant of risk and then actually finance the SME sector, because obviously they'll want guarantees to ensure that the risk that they're taking will pay off in the end.
And just very quickly, if you had to name the biggest challenge that you think weighs the most heavily on Kenya's economy, what would it be?
The economic structure and the neglect of micro, small, and medium enterprise. And that's why I think the SME facility is welcome. If you look at the population, 83% of employed Kenyans are in the informal economy. And still to this day, the country does not have a coherent strategy to address informality, to address the problems of productivity and profitability in that sector, and eventually in the long term encourage formalization. So what you're finding is that the bulk of the population is stuck in very low productive activities, whether it's in agriculture or manufacturing or services. So there needs to be a fundamental refocus on the informal economy, on informal businesses, and as I said earlier, a need to revamp manufacturing to create the jobs and to create the manufactured products that Kenyans consume anyway.